If you've ever felt overwhelmed by investing and didn't know where to start, ETFs might be exactly what you're looking for. They're one of the simplest and most effective ways to build wealth, but most beginners have no idea what they actually are or how they work. So in this video, I'm going to break down everything you need to know about ETFs in simple terms. What they are, how they work, and why they might be perfect for your investment journey. Look, I get it. The investing world throws around terms like ETFs, mutual funds, index funds, and expects you to just figure it out. But here's the thing. ETFs have become a $10 trillion industry for a reason. They've democratized investing in a way that was impossible just a few decades ago. By the end of this video, you'll understand exactly what ETFs are, how they work, and whether they're right for your financial goals. No jargon, no complicated explanations, just the knowledge you need to make informed investment decisions. So what exactly is an ETF? ETF stands for Exchange Traded Fund, but that technical definition doesn't really help you understand what it actually is, does it? Think of an ETF like a basket. Instead of going to the grocery store and buying apples, oranges, bananas, and grapes individually, imagine you could buy a pre-made fruit basket that contains all of these fruits in the perfect proportions. That's essentially what an ETF does, but with investments. When you buy shares of an ETF, you're buying a tiny piece of a basket that contains hundreds or even thousands of different stocks, bonds, or other investments. So instead of having to research and buy 500 individual stocks, you can buy one ETF and instantly own a piece of all 500 companies. Here's what makes this powerful. Let's say you want to invest in the biggest companies in America. You could spend months researching Apple, Microsoft, Amazon, Google, and hundreds of other companies. Or you could buy an S&P 500 ETF and instantly own a piece of all 500 of the largest US companies. One purchase, instant diversification. Before we go any further, I want you to ask yourself this question. Have you ever avoided investing because it seemed too complicated? Drop a comment below and let me know. I read every single one. Now you might be wondering, how does this actually work behind the scenes? Who decides which companies go in the basket? Most ETFs track an index. An index is basically a list of investments that meet certain criteria. The S&P 500, for example, is a list of the 500 largest publicly traded companies in the US. The people who manage the S&P 500 ETF don't get to pick and choose which companies to include. They simply buy the same companies that are in the S&P 500 index, in the same proportions. This is called passive management, and it's brilliant for two reasons. First, it keeps costs incredibly low, because there's no team of expensive analysts trying to pick winning stocks. Second, it removes human emotion and bias from the equation. The ETF simply follows the index, whatever happens. Let's look at a real example. The SPDR S&P 500 ETF, with the ticker SPY, tracks the S&P 500 index. When Apple's stock goes up, the ETF goes up. When the overall market goes down, the ETF goes down. It's that simple. But here's the cool part. You can trade ETF shares just like individual stocks. The market is open from 9:30 a.m. to 4:00 p.m. Eastern Time, and you can buy or sell your ETF shares anytime during those hours. This gives you way more flexibility than traditional mutual funds, which only process trades once per day after the market closes. So why have ETFs become so popular? Let me break down the key advantages that make them incredibly powerful for building wealth. First, instant diversification. Remember our fruit basket analogy? When you buy an S&P 500 ETF, you instantly own a piece of 500 different companies across every major industry. If one company has a bad quarter, the other 499 companies help cushion the blow. This dramatically reduces your risk compared to putting all your money into individual stocks. Second, incredibly low fees. Most broad market ETFs charge between 0.03% and 0.22% in annual fees. That means for every $1,000 you invest, you might pay just $3 per year in fees. Compare that to actively managed mutual funds that often charge 1% or more. Over decades, this difference in fees can cost you tens of thousands of dollars. Third, accessibility. You don't need to be wealthy to start investing in ETFs. Many brokers now offer fractional shares, meaning you can start investing with as little as $1. You can literally own a piece of the entire stock market for the cost of a coffee. Fourth, tax efficiency. ETFs are structured in a way that makes them more tax efficient than mutual funds. Without getting too deep into the weeds, this means you'll likely pay less in taxes on your ETF investments, which means more money stays in your pocket to compound over time. And finally, simplicity. You don't need to be a financial expert to invest in ETFs. You don't need to analyze company earnings reports or try to time the market. You can build a complete investment portfolio with just 2 or 3 ETFs and never have to worry about picking individual stocks. So let's recap what we've covered. ETFs are like investment baskets that let you own hundreds or thousands of companies with a single purchase. They offer instant diversification, incredibly low fees, and the flexibility to trade during market hours. They're simple, accessible, and have become one of the most popular ways to build long-term wealth. The beauty of ETFs is that they've removed most of the barriers that used to make investing complicated and expensive. You don't need a financial advisor, you don't need thousands of dollars to start, and you don't need to spend hours researching individual companies. Next up, I'll be showing you exactly how to start investing in ETFs step by step, from choosing a broker to picking your first ETF and building a portfolio. That video will be out soon. If you found this helpful, make sure to subscribe because we're just getting started with this ETF series. And if you want to explore other wealth building strategies right now, check out my passive income video. Link is on your screen. Thank you for watching.